Hello active traders, I'm Ken Calhoun from TradeMastery.com with the channel dedicated to help you make bigger winning trades more often. In this episode we're going to look at mean reversion day and swing trading. And that's basically where a chart, I'm sure you've seen these, it runs up or gaps up, pulls back down to the middle and then starts to bounce. How do you set up a trade for that? We're going to take a look coming up in this episode. When it comes to looking for pivot trades, this has been a particularly common, frequently occurring pattern I've seen, at least in my own trades. And that's where a stock chart runs up, it pulls back down to around half, slows down a little bit, and then starts to resume its upward trajectory. Now there's a couple of quick tips that can help you in making the most of this particular trading pattern. The first is trade instruments that have wide trading ranges, multiple points, not cheap stocks under $10 or penny stocks or things like that. I like stocks $20, $30, $40 a share that have big multiple point runs that then sharply drop and then start to pivot back up to the upside. So there's plenty of profit potential on the upside. So charts that have wide, clean charts is the first tip. The second technical tip is to look for volume to come in that's larger, and this one's really important. You see a chart that runs up and it pulls down and starts to bounce. Make sure that the volume on the pivot is larger than the immediate past volume on the way down. And what this tells you, at least what it tells me as a trader, is that we've got new traders coming into it, not just people who are covering their shorts that leads to a sideways choppy chart, but in fact we have another rush of new buyers coming in off that pivot support. So that's the second tip. Take a look at this chart, for example. Here's an example of a good swing trading chart that has a mean reversion setup. Do you see how sharply it ran up and then how quickly it ran back down and then how it's starting to bounce? That's a good example of what I'm talking about. And if you take a look down at the bottom part of the chart, you can see the volume increased on the way up after the pivot. Okay. The third tip is to use the support line right under the pivot as your stop out level. So if something runs up and it pulls down and starts to bounce, the neat thing about this strategy, at least I remember in my own trades, is it's very well defined where that pivot occurred, and that makes for a nice, relatively small or tight stop loss level. So something runs up or gaps up, pulls back down and starts to bounce. If you go long, your stop level, your initial stop loss level, is right under that support line. So that makes it very easy visually to see where support is, so you can manage your exit for the times that they don't work out. For all the times that they do work out, and kind of the last tip is the exit target is just simply the previous high or right underneath it. So a chart that runs up or gaps up, drops and starts to bounce, your exit target is whatever that previous high was on the right side of the chart as you get into your trade. You can always scale in or position size if the breakout continues later, but that's a really good kind of the leg of the trade. You get a kind of an ABC wave. It runs up, it pulls down, it starts to bounce off the midpoint. The initial stop is right under that support of the pivot, and the exit target is going to be at the previous, right under the previous high, and that's the trade window within which to manage your entries and exits. So take a look for charts like these. Here's an example of a day trading mean reversion. And again, mean reversion is just simply a fancy way of saying mean means the average. So a chart that had this much trading range on the way up, the average value is the mean, or the X bar. And so that's the 50% retracement or reversion. The play is to see if it bounces. And often they will, especially in a good volatile market like we've had lately, right? So as you start taking a look, every single time I put on a trade, I'm looking for where's the most likely place that it's going to run. Is it worth trading in the first place? How do I manage risk? And how do I play the patterns? And mean reversion day and swing trading pivots are one of the favorite plays for both intraday and swing trading in highly volatile markets. A quick warning note though, if the markets go sideways, this pattern doesn't work as well. It works best in volatile markets because you're looking to capitalize on good volatile pivots after a big run up. Because whoever bought it on the way up knew something that you and I don't know. They took profit, it sold down, they will often come back in to rebuy their position on a continuous move up. And that's what you and I are looking for to capitalize on in our own trade. So anyway, I hope this has been helpful to you. For more, be sure to visit swingscans.com. If you're a swing trader, it's www.swingscans.com. We get weekly webinars, a really good time. I work with traders from around the world, and we have our top 10 picks. Also, if you're a day trader, you may want to consider, ran since the year 2000, my Trading the Open, www.tradingtheopen.com live stock day trading room. And we meet the best days of the week, which are Tuesday, Wednesday, Thursday mornings for open range, breakout, and gap, mostly gap plays during the middle part of the trading week. And finally, if you want to look at my courses, fortunately they're not up at $3,000 or $4,000 ridiculous prices like some people charge. I've got dozens of video downloadable courses at www.tradingvideos.com, and that'll forward you to the course listing page inside the Trade Mastery portal site, and dozens of courses, and most are relatively inexpensive, under a couple $100. So anyways, those are some resources to help you continue your education. So until next time, trade smart, trade with small size. If you're looking for mean reversion pivots, look for the ones with the best defined wide trading ranges. Play the pivots intelligently. Use a very careful risk management strategy, and develop your trading plan ahead of time. Kind of visually mark out where you anticipate the trade moving. And if it's right, that's great. And if it's not, then use a very tight initial or trailing stop and make the most of it. So anyway, let's go get them, and I'll see you guys in our next episode. Best wishes for success from me, Ken Calhoun at TradeMastery.com. Goodbye.
Great job, Ken. You were amazing. Hi traders, we hope you liked this Trade Mastery video with Ken. Go ahead and subscribe to Ken's YouTube channel and post your comment or question in the area below. Thanks for watching and good trading!